Okay, Rob Ellis, Horizontal Land Partners. We just did a write-up on our moving forward strategy, which is outlined right. Let's see here. Land buying memorandum. And it says Florida only. We're focused on fast track subdivisions with municipal overlays and active utility zones, ideal for 12 to 24 month shakedowns. We ranked all of our counties. We ranked our strategic comparisons across Florida, Texas. We looked at the net migrations that reflect it, zoning and infrastructure plans, incentives, and we came up with, I think, our top 3 counties. Let's see here. Let's look. It's really county migration clusters. We talked about Texas versus Florida, zoning fast tracks. Okay, so Volusia County is where we're looking. We have a couple top ones that we went through, but this is kind of just a more strategic overlay on the entire state. But we had a more specific one that looked at Volusia County as Polk and Pasco as our top 3. But really any of those counties, any of these top counties is where we're looking. So, and these are massive net migrations. Texas, these are net migrations, not move in, move out. Like Miami-Dade still does have net, but 100,000 people leave a year too. There's a ton. I think it still has a net positive, and it's the number 1 in the whole state, but net new or permanent transplants is what we're looking at, which Polk, Pasco, Hillsborough, we have to look across the board on Ocala growth. Some of these are too slow. There's all sorts of feedback that we hear, but we're looking at Volusia County for land offerings. So one of the things we're looking for land for sale in Volusia County. We've already looked at a bunch of these submarkets and made offers across the board, and I already have one in mind that I'm going to show you guys, but I'm going to show you how we backed into this. What we want to do is look for land tracts under $1 million, over 20 acres. Up to $1 million. If there's too many, we can bump that to 40. So we're going to go to 20. And that gets us to 29. If we look at the map, we're looking for metros or where they might be in overlays. So there are these white areas are within overlay districts, right? These are in rural areas. That's rural, that's rural, that's rural, that's rural. And some of these are kind of mistakes. So looking across the board all around here, what city allows me to purchase a land tract that makes any kind of sense? You can look down here at the submarkets and see where these are concentrated. And what we find is that over here, there are 3 to 4 land tracts available, and we prioritize ones that fall within the municipalities. So we have a few here. Here's 34 acres for $240. We got another one that is 23 acres for $199. And we have 43 acres for that. So we typically, I've already offered on this one, and we're going to come up. This is the one we're going to look at here. So what we're doing is we're going to dial it in on this right here for the sake being. I'm going to say, can you review this along with our investment thesis by county and purchasing and show the potential lot yield at entry level, which is 50 feet by 135 feet, and zoning pathway, assuming a net loss of 25% to stormwater and infrastructure, public roadways. Here is the site info. do a write-up on development, feasibility, pathway, and a fit test based on our fund's annual land holding land allocation summary. We pace the site, and that's why I wrote that up today, because as we want more discipline. And so we plug this all in. And this is draft one of, here's a full development feasibility and fit test. Acreage, 8,000 in acreage. Zoning, unspecified but likely rural, residential, or RE1 or RE2 under current Volusia County or City of Daytona code. 2 parcel IDs. City of Deltona is the jurisdiction. Sub 10,000 an acre. Appears flat, vegetated, no obvious wetlands, but confirmation via phase 1 ESA and topo is needed. Potential lot yield, 32 net, that's 209 lots. Current RE1 or RR, not within the community development area, must verify within incorporated City of Deltona. This is the fit. Target, rezone to SFR, PD, or PRD under City of Deltona. Allow minimum sizes, 6 to 7,000. Precedent exists in Deltona Lakes and Lake Gleason Reserve. Tools for fast track. City of Deltona offers PD zoning pathways with internal roads and density flexibility, eligible for CRA expansion overlay through a petition. Potential NCA overlay, that's not how you do it. There's different ways to do it, and shows that. County migration, yes. 13,000 plus. Tier 1 growth county. Price per acre, yes. Minimum lot counts. That's 8,000 an acre, targets under 20. Minimum lot count, 200. It's greater than 100. Builder fit, still active in Volusia, NVR, DR, and Dreamfinders. Entitlement timelines, needs full zoning change and potential annexation confirmation. Incentive stack, not in the CRA. Incentive stacking is different in Florida. Can you review? CRA and NCA are not Florida strategies for municipal bond. The use is through a tax savings lever and an assessment. Can you change the wording for a municipal bond offering pathway that's reflective of this submarket, and look for public incentives through that other builders have followed? Talk about bond underwriting teams, feasibility to partially recover infrastructure. Double loaded lots, double loaded streets. And we should budget an infrastructure budget of $30K a lot, partially recoverable through a municipal bond offering if we hit that timeline, and also show our 12-month pathway to SPV close through LPA from the top builders in Florida. This is going to be a public facing document that the owner can review, as well as the listing agent and potential partners. This is our pre-option offer feasibility review and will be attached to our option contract on this site. Refined pre-option feasibility review, public facing review for owner, listing agent, and prospective. Site summary, yield estimate, Target lot size, partial reimbursement through future municipal bond conceptual site, stormwater. I think they need to build in a little bit more environmental. Tudor Street land holdings SPV. Proposed 200 lot takedown minimums. Incentive layering. I think we will segment this into 2 builders with the minimum takedown by product line, non-competing. So that could be patio homes and entry level, or something reflective of builders who are under 400K new build. Provide a quick scrape of price of new construction homes in this submarket and city, and pricing, and what builder product lines are a fit and what builder. It could be a BTR and what builder. We are platting for detached. I think you need to add more about wetlands removal, and this site sits in a lower plane. We will need to bring in substantial geotech, substantial soils and sand. So we need a great environmental and geotechnical exploratory firm, including a phase 1 environmental, and then we would select a civil team who does the platting, which would occur after the first 3 months. Move up detached. Environmental, given the site's location in a lower floodplain, wetlands assessment, soil and geotechnical, phase 1 environmentals, right? Development timeline, a structured timeline, select a civil engineering firm, plats, zoning adjustments, obtain a final plat, commence site development, and turn it into an SPV. Infrastructure budget, CDDs, MSBUs, okay, and proceed with due diligence, initiate, engage civil engineering, coordinate with builders. Okay. Okay, include all of this in as lengthy as possible. Development, feasibility report, pre-option that gets attached. And also make sure that we will offer up to 5% of purchase price through 3 options. So you can show those amounts, and after 30 days initial, the initial deposit becomes hard, and the other 2 are also hard deposits. None are applied to the purchase price. That is a recommended structure. PSA to be executed at option exercise and close within the SPV cash. We are not represented and are working very well with the listing agent, working with agents on double-ended transactions, which is legal in Florida, incentivizes them to help bring together the gaps from institutional level land banking and development with the typical Florida land seller who may not be an institution. This should all be outlined in the same one. This should read like there's no questions. And I didn't just mean under 400K, but I think the active number of listings, if you scrape, and this submarket will show the distribution of new construction and show a heavy favor to lower. If you can make that less driven by us and more market driven, I think it will give you a stronger sense of how much we can sell lot fours, which is typically 18% of new build price capped. And how it's breaking these up, I think it needs to break it up into 4-month chunks to be reflective of there's preliminary analysis and concept, right? There's like entitlement, environmental, and then it's platting, and then it's development, financing structure, the option consideration of up to 5%, payable upon execution, non-refundable. So it's 3 equal options fees of 1.33% or 5% over 3. And I think yours should reflect 4-month blocks, not 3-month blocks. Also, make sure to include the feasibility and fit test based on our land purchasing criteria that you had above. Stop truncating this. Full-length public-facing pre-option and development feasibility. This site feasibility analysis of Tudor Street, intended for a horizontal subdivision, aligns with our land acquisition mandate and is designed to bridge institutional development criteria with seller side and agent side transaction clarity. The parcel is ideally positioned for a 200 plus lot detached subdivision, targeted builders under 400K. 72% of new builds are priced under 375,000, with some of those there. So it's heavily towards affordable detached, which is what we talked about. We show a yield model and site plan, assumptions, net developable, standard lot, estimated lot count, infrastructure build out. We segmented builder strategy, entry level, detach and move up, environmental concerns, and that zoning pathway. The zoning pathway should show site control for 12 months and phases in 3 phases at different levels of risk: zoning, wetlands, wildlife, environmental, and then transitioning to platting, risk, and civil engineering, and then more to LPA fit by submarket. So builder engagement starts in phase 2 and is finished in phase 3. Our option contract is up to 5%, which is what ours will reflect. Each of the 3 phases has 1/3 of that. You can show the amount. We've pre-screened the site, and that's reflective of our disciplined and consistent institutional level land purchasing. Okay. Incentive layering comparable. Make sure to incorporate this. The listing agent will need to identify their brokerage comfort to represent both sides, or we would request to represent both sides fairly. And the point of this document is to show a very clear pathway to a 12-month exit. When we have an LPA and final plat submitted is when we can close into an SPV that will be capitalized with a proof of funds. For now, due to the large upfront investment, I think you should break out a $250,000 investment and showing how much it cost to get there over 12 months. That includes engineering phase 1 and potential phase 2, municipal bond advisory, etc. There's substantial. It may even be larger than that, but some come after phase 2. So it shows we have a high amount of expenditures. Just outline that and put today's date if you can. I think we should do 1% for phase 1. After 30 days, it goes hard, and 2% for phase 2. I think they're going to want to see more, and 2% for phase 3. That lowers our initial conceptual risk, but we only tie the site up for max 30 days until option 1 becomes a hard earnest deposit. And when phase 2 begins and we put that option fee in escrow, the first one is released to the seller. These are not applied to the purchase price. It is our cost of doing business, which means we pay to have site control. It's an institutional level purchasing tool that minimizes actual that minimizes and controls allocation risk. These are all standard terms. And I'd use phrases like plans to control, since this is a forward-looking document pending seller and buyer terms agreement. Okay. Institutional grade pre-option development feasibility report. %1, 2%, 2%. None apply to purchase price. PSA executive option exercise. Closing occurs via SPV. Can you put the proposed SPV non-branded name or holding co as well? And it will be incorporated in Florida or Delaware. And will serve as the entity that will sign contracts, offer bonds, etc., and ultimately close on the site. Municipal bond infrastructure is very critical under 400K to recover. So we should know about that by month for during the first option. For public attachment to proposed option contract. Tudor Street Land Holdings SPV. There you go. Maybe you can add a section. You truncated this. I want this to be lengthy and thorough, but total seller proceeds will be the total purchase price plus options. I think that helps. So if we pay $17,000, 17,500 divided by 365, it's $50 a day for us to hold the site. Also showing total days of potential site control. We don't want to always do that. It doesn't sound, I think that helps. Okay. Make sure you stop truncating. Make this as lengthy as possible. Clean acquisition vehicle. recovery mechanism, MSBU or CDD, non-geo bonds, target recovery, bond recovery. I typically see a higher. Okay, we can just put that. I think it's fine. 12-month entitlement and closing time frame. Entitlement number 1, execute option, wetlands, jurisdiction, municipal bond viability, engage civil engineer, plat, soils report, builder pod strategy, pod A, pod B, entry level detached, move up detached. And that is 50 to 60,000. Pre-closing, $250,000 in soft and hard costs during the control period. Admin, travel, public engagement. This is all extremely civil engineering and site plan, wet plans. It just shows kind of what that could be. Brokerage position is not represented directly with the listing agent. Dual agency is permissible. Request confirm its viability to fairly represent both parties. An efficient, unified execution plans that provides both parties with aligned communication and closing confidence. Purchase price, total seller proceeds, contracted, option consideration, paid over 12 months. Summary. Okay, and then we say, how would you rate this 1 to 10? Okay. We're definitely not going to do those things yet. But this is how we do a much better. Let me see if we had the fit test. Okay, yep. So we're gonna go to and the only thing we're missing is the it's the public facing attachment to option agreement. And this shows this is what 6 pages, and that's before we even touched it. That shows our phasing and everything else. This is a very institutional look at how this works, and it breaks out things as we continue to improve the way that we connect an institutional land bank firm with individual landowners. This is a very reflective way. Dual representation is a great way to do it. The seller's agent is incentivized to get the deal done. Now we're going to look at Volusia County Auditor. We're going to do, yes. We're going to pull up the 2 parcel reports. Subdivision names, and it shows the tax district. I'm going to say I'm going to give you existing conditions breakout to this. Can you help me come up with an existing conditions overview of this site? Basically, public tax data aggregation. There are 2 parcels. This is zoning incorporated versus unincorporated, access, overlays, future use, etc. So we do that one, and then we're going to get, sometimes because there's so much here, it's good to start a new tab. And let's see here. It's non-agricultural, and we think this is in the overlay. Can you show the total land position by parcel and taxes? It says 40 acres. Was there only one? Okay, so it looks like I didn't pull the right one. This one might be, here the two are again. So we did this one, 49378. And we need to do this one up here. I think we just missed one of them. And here is the other one. Is this all you can get from the data I gave you? Yes, this is an existing conditions deep dive. And I'll give you a little more, but we just want facts and potential strategy. It sounds like turning in a tax bill would help. A tax bill challenge, an assessment challenge. It's incorporated, which is great. Non-agricultural, urban low. Subdivision, unrecorded site will require full platting. No CRA access. Site may lack paved road, overhead lines common nearby, easements. If Tudor Street may require off-site road build out, no formal plat. Stormwater, wetlands not flagged, require formal screening, legal ownership. Phase 1 ESA due to raw land, rural location, and potential dumping concerns. Subdivide, build to rent, option 3. Take out the strategic. Okay, so now we're going to look at the future use overlay. Deltona future use map. RE5. Here are the screenshots that show it's within the future overlay and it shows it as RE5. It shows it looks like the only access is off of Tudor. So access we need to check on. Here is the screenshot. Show if so the zoning pathway most flexible to get to 50 by 135 build lots. We also expect that they will want another access on the east side to continue to expand the city as well as the south and potentially the north as subdivisions like this and greenfield areas are typically platted for future expansion opportunity, like Tudor was, within a larger pre-existing plat. The future ones will need to be annexed, and it looks like. Can you add that and make sure this is a total existing conditions report? Existing conditions report, Tudor assemblage. RE5, minimum 5-acre lots, unrecorded. Unimproved right of way, east side access, north access, south access, internal stub from existing subdivision. expansion. The site is situated at the eastern edge of current Deltona, making it a logistical expansion node. Future development to the east, south, and north will likely require annexation, pre-dedicated water and sewer not connected, available nearby, storm utility, electricity, environmental screening. Zoning constraints, minimum 5 acre, no subdivision permitted under current code, intended for. So it would be recommended pathway. We would probably do a rezone. I think we would need the density we talked about, and I think it's higher yield. We assume a 25% loss on the total area, which means we need smaller lots. R1, I don't think allows for that. I think PD allows us various lot sizes. And if we segment to move up, we need 5,000, 6,500, and 7,500 square foot lots. Up to 10,000. What vehicle or zoning vehicle allows us to do that? It's basically a replat, or is it rezoning as well? PD or PUD? What's the difference between what is recognized by City of Deltona? We would plat all at once, but we need to review. We'd also like the option to tie up additional land tracts to the east, south, and north and move them into an overlay, like a larger tract. Can we incorporate them into this once we have land control? Or is each one separate? What we want to is like a new district. In Ohio, they are called new community authorities. What are they here? Basically, it allows us to continue to move these into our control and district, and gives us infrastructure. We want to create a developer controlled board that allows us to continue private municipal expansion through tax abatement and recovery by municipal bond offering, by offsetting those with special assessments. How would we write that up so we get preference? and control the new development authority, especially as you see where these are expandable, larger land tracts should introduce new commercial, institutional use, etc. This is a bridge parcel to unincorporated future land that will have to be annexed in and moved within our assessment. And we want to be the infrastructure developer, even if we don't control the land. How would we do that? You're outlining a Florida version of Ohio's new one, and it has one. Community Development District, a quasi-government taxing district controlled initially by a landowner, and a CDD, control future tracts, establish a CDD via petition, and we want to initial board expansion areas. We want to show all that land. Let's see here. You see where the marsh swamp hits. We want to control all this land. And we'll show what that looks like. Cooter Street. Cooter Street. Deltona, Florida. Deep Creek Preserve. Map. $2,300 acres. All that land bounded by Deep Creek Reserve, which is currently unincorporated county land, to be able to be annexed into our CDD and the city of Deltona, and create a beginning master plan for this area as additional larger land tracts want to come in. I took a screenshot of it. It looks like approximately 2,300 acres, which could be up to 8,000 housing units, but also requires additional mixed use, non-residential development like retail, public, institutional, etc. We plan to oversee the board of the CDD and be the preferred developer, although additional private bids would be possible. We believe the board should be made up of attorneys that specialize in and advise municipal bond offerings because infrastructure is the biggest gap. We don't want to happen what happened in Homestead, which was all residential development. So future master planning and city resources, we think should be used. This is a very unique opportunity. Is the area larger than that? Or would you say that is pretty accurate? There are multiple parcels for sale outside similar price ranges, but this one is essential for proper access and connection. And future access needs to be on larger right-of-way dedications, part of a larger master plan to connect this corridor to the rest of the city for a more holistic development plan. Can you incorporate all of this within the existing conditions, pathway, and expansion plan? This document outlines the current conditions, entitlement pathway, and regional infrastructure overlay. Existing conditions, zoning pathways, development, entitle, whatever, CDD, East Deltona Infrastructure District, recovery, initial board, expansion area, master overlay zone. I don't think I took. Let me see if this seems right. Here is the data you can show and describe it. Does that look accurate? I think Deep Creek is bounded on the east side as well, isn't it? Yes, I think the initial would be 2,000 to 3,000 acres. And it needs to connect and include a major artery street for commercial proper planning, which is, you can see here, Elk Cam Boulevard. Which is Elkham Boulevard. It seems like splits this up. We'd like this entire thing to be under the control of a larger public private infrastructure CDD. Do you agree with all this structure? Wow, what an amazing opportunity. Well conceived, highly scalable, and best in class land governance. Initial district size, ideal for the chapter, large enough to justify multi-phase bond issuance. Economies of scale. Backbone artery, critical. The only continuous east-west route bisecting the future district. The logistical corridor, widened, signalized, upgraded. Recommendation, major collector with minimum 100 right-of-way dedication. Bike, pedestrians, landscape, unified private CDD with phased control. This structure is optimal for controlling over 2,000 acres of phased horizontal development. You want to recover costs via assessments, maintain capital, governance, create East Deltona master PUD overlay, all future pods. Do we agree? Yes. Public, private. Has anyone done this in Florida? With larger land tracts adjacent to areas like this. This could also be an expansion city, but we'd like to tap into Deltona. There will more than likely need to be large sewer and water and stormwater extensions and collaboration with the wildlife preserve for proper boundary development. There needs to be an overall plan. Let's see how far south we should go. Maybe we need to go even larger and say we'd like it to go all the way down to Deep Creek. It looks like Deep Creek. I think we should take this all the way down to, maybe we should take it a little bit further. We actually want it to be, I think that it comes. It should go all the way down to 415 and absorb that with a major exit right here. So we think it should be actually larger. Let's see how big this should be. Okay. That's pretty good. when I look, I think we need to go down all the way to where Pride High School is. And Pine Ridge High School. Because this many housing units will need additional schools. So when I put the new boundaries in, Deltona can expand this entire area, and we want to show how that's possible. This, if we look at the overlay, North State Road 415. This needs access from North State Road 415, and private one by one expansion is much worse. You want to avoid what happened in Homestead, which was one type of residential development. This gives the city a chance to control that and put in public carve outs for parks, schools, circulation, exit and access from major arteries to control traffic. We recommend the CDD from part of the initial subdivision invests privately into engineering reports, and a larger RFP is given for this opportunity. I think the total represents approximately 3,000 acres, and a lot of it is bound in the Deep Creek. What was that? The Deep Creek Reserve. This okay, let's look at the city's master plan. Three thousand to 4,000 acres, mostly bounded by conservation or public land that can't be developed. We also note that two of the most recent rezoning requests was all residential, which occurred in 2007 and 2015. And with this one, we plan to develop long-term into a larger master planned community with total control. Since we don't own or control this land and it's segmented. A larger public overlay and master plan designate this and restrict lands and dedicate them. I attached the two recent rezonings and the legislative action that show both were residential. It's important for the local municipality to have control, and this district with CDDs allows for, with CDDs and a larger master plan allows for it. Ours is a rezoning, and we want to connect unlike the other developments. So we believe this can be a larger expansion of up to, let's say that's 3,000 for dwelling units, an acre, office, commercial, retail, self-storage, hospitality, etc., and grow a large commercial corridor off of, let's see where that is. US 415. US 415 with a large circulator and traffic intersection planned there. Can you integrate all of this? And I attached the screenshots. And also, if you can find out when those schools were built, it shows that on fringe areas, that's where public schools can be built, and it's important to have control of this overlay by the municipality. For proper school lens and locations of elementary school. We plan to dedicate free carve outs as we develop, or landowners can sell land to a larger development corp, which we will incorporate as a public-private institutional level land banking arm to drive the majority of control over here. Make sure this is airtight, and if there is a presence for this kind of partnership to do it, or show how Homestead got out of control and Leisure City and Florida City because of improper planning. This controls the density, general overlays, etc., and allows a public eminent domain for strategic land consolidation along key corridor growth. This could be a major growth opportunity, along with major anchors that you could bring in, like a 20 to 40 acre shopping center of 1 million square feet plus. Part of this should also be higher density overlays the zoning code is extremely outdated. The starting density should be RM6 or RM12. Deltona East Expansion Corridor, existing conditions, zoning pathway, and master development overlay. This document outlines the current conditions, entitlement pathway, and regional infrastructure for Tudor Street assemblage along surrounding Deltona East Expansion Corridor, the most scalable bounded expansion opportunity for the city of Deltona. Horizontal Land Partners intends to establish a CDD, initiative PUD rezoning, and guided phase master planning for 3,500 acres, integrating residential, commercial, civic, and institutional uses under coordinated public-private framework. I would say rate this 1 to 10. What am I missing? Yes, add all of that plus the need for another major north-south artery of at least 5 lanes and 120 feet for major circulation through non-residential corridors. Add the name of the land trust. We also need hospital and public health system integration, colleges. They could have a large new expansion campus here for University of Florida, school systems, etc. Libraries. Formal overlay district to be controlled by the municipality via CDD. We think that a civil engineer, environmental engineer, and infrastructure developer with institutional level advisory should oversee this CDD, and it should be private, not public, but the public overlay and land bank would be a JV. Major infrastructure developers can be looked at. Major infrastructures developers along with us would incorporate a preferred vendor list for a JV to oversee and allow for private utility bids would be done. So the infrastructure could be contracted directly to the CDD. Is that possible? land trust, CDD, CRA, and institutional level partners, 10,000 with a 3% inflation, investor credible execution path. It's similar to Babbitt Ranch, and their activity, I think, is around 10K an acre, isn't it? If so, add in the precedent. I think they sell land back to the public land trust at 10K per. They worked with the government as well, very strategically, and the county. Is that true and verifiable? Can you add that to that area to show the precedent set in other Florida counties? Is supported by the Florida president. Babbitt Ranch, 91,000 master plan community in Southwest, employed a similar structure and partnership. Kitson and Partners offered 2,200 to Lee County's conservation. Despite entitlements, Florida Power and Light also acquired. These transactions show around 10,000 acre adjusted annually is both viable and accepted by conservation authorities and public agencies. The Deltona East Land Trust adopts the same structure. Can this be larger, do you think? The 3,500 acres? What land is more to the south and east? So I'd recommend a section that talks about strategic expansion around these large land tracts and incorporation into a more structured development plan. How much of the county could this absorb? Where is the other municipalities to the south or east? We have, we would recommend the county continue to identify with us every year large land tract holdings and incorporate them into this expansion of Deltona due to the larger organized growth plan and access for a district that could exceed 10,000 acres. That's it, guys. I got a lot of work to do.